I don't think that he's trying to join the room here, but I think he's at the wrong time. Okay, yeah, he popped out. Okay, good. Just didn't want him to Okay, very good. We are live, everyone. Welcome. It's Monday. It's the 20th day of Out of This World, October 2025. I'm Gianni Di Poce. I'm going to be with you for the next hour here, and it's always an honor to be surfing the charts with you all. I hope you had a good weekend. I had a good weekend. It rained quite a bit yesterday, but on Saturday so my son turned 3 back on the 21st of September. We had a birthday party for him here at our house. But yesterday we celebrated another birthday party for him at my parents' house, his grandparents, and then we actually stopped by some other friend's house for a birthday party on Saturday. So a bit of social activities, which were good. Got some stuff done around the house, like small repairs. It's pretty much time to start hunting in my neck of the woods here. So spent some time getting ready for that as well. And yeah, going to be heading up to the hunt club this weekend. I'm looking forward to that. And just fall cleanup around the house. You guys know how it is if you are anywhere north of pretty much Kentucky at this point. It's starting to cool off, but it's been a beautiful fall so far here in Michigan. And I think it's been a beautiful season for the market as well. What a week that we went through last week. That's why I've been, wanting to call this month Out of This World, because we actually went through one of the more rare occurrences that happened. You had the VIX going to backwardation. You had stocks not even 2% off their all-time highs. There was a lot of concern, a lot of fear, a lot of panic. I still don't really know why. There's a bunch of ideas and theories out there. Was it because of AI? Was it because of the regional banking situation? Was it because of the government shutdown? Was it because of China trade stuff? We don't really know. We don't really know, but we seem to have shaken off a lot of that now. We never veered off of course. During these sessions over in the Trinity trade, are you going to have some stop losses triggered during volatility? Absolutely. But that's okay because I'm actually one of those traders that does not take a loss personally. I actually bought back some stuff the next day after being stopped out last week, and today they're moving in the right direction. My Trinity traders will know what I'm talking about in that respect. And so why am I okay with that? Well, I have a model, I have a system that tells me, hey, we're starting to shift here. I still respect my stop losses though, right? So if there's not like immediate follow through, and then my system is saying, hey, we're coming into another period of reversal, well, then I have to keep an open mind. And I don't always do that, but there are instances where that is the right thing to do. But before I get into my agenda that I have for you today, I want to talk about the dangers of motivation versus the promise of discipline. I come in here every day. I try to make this material fun and exciting for you. It is for me. I am pretty passionate about this stuff, in case you haven't picked up on that yet, if you've been spending any regular amount of time with me. I've always found markets pretty fascinating, which is, I've said before, I'm kind of like the black sheep in my family, because I come from more like cement, agricultural, hands-on type thing. I mean, we're hands-on in the markets, but it's just a little different in that regard. But I do enjoy like looking at the charts, finding patterns, discovering trends. I enjoy nerding out over macroeconomics. I mean, yeah, like the average person isn't going to do that. I mean, you come here, I always say, like, you're not average when it comes to the market and to the economy. You need to remember that, because the average person isn't seeking out how to beat the market. The average person is trying to pay their bills, right? So we know from that standpoint that we are different. And so we have to understand that we're different and embrace the fact that we're different, right? Lean into your differentness, if that's even a word. But that's a totally different discussion. The dangers of motivation versus the promise of discipline. Okay, so I stopped myself out last week on some positions, bought them back, and they're working. We'll see if they actually work out. But I'm not really a big fan of like all this motivational talk out there, like you need to do this, you need to do that, because motivation is kind of like adrenaline. You can't rely on adrenaline to get you through long periods of time. You can't rely on motivation to get you in the trenches day in and day out. Discipline you can. Discipline is a way of life. Motivation is for the moment. Okay? And so I don't care if you want to be a day trader, I don't care if you want to be a position trader, a swing trader. Motivation is not going to do it for you in the long run. Motivation is not enough. Because I don't care if you're a day trader, I don't care if you're a buy and hold investor, okay? It's still a marathon. If you're a day trader, you need to come in and day out and execute. If you're a buy and hold investor, you're not, transacting as much, but either way, discipline is going to get you through, get you to your goals much more than motivation can. Okay? Motivation is artificial. Motivation isn't real. Discipline comes from the source. So, I know there's all these like motivational, like self-help, content out there. That's not really my thing. I'm big on discipline. I don't shy away from pain. I don't shy away from the tension. Last week was tense, guys. And the stocks that I've owned that didn't get stopped out actually look a lot stronger technically now than they did last week. Why? Because they put in higher lows. I'm going to be able to manage risk more effectively going forward now because of last week's volatility, because of the tension that I was able to hold and not lose sight of my plan. I'm now in a better position now than I was 2 weeks ago. That's why I say volatility is the price that we pay to invest. It's like going to the gym, right? I was at the gym this morning. As you're working your way up, you're increasing your weights. It doesn't necessarily feel good, right? There's pain, you're sweating, you're uncomfortable, but then it gets easier. And that's the promise of discipline versus the dangers of motivation, right? You see people come into the gym January 1st, they're gone by the second week of January, right? It's a way of life. Trading is a way of life, and discipline is what's going to get you there. So I wanted to share that with you because I was thinking about, last week it was testing. It was testing, absolutely. Absolutely. But reminder, the trend is up. The NASDAQ closed at its highest weekly level in history last week on Friday. Judging based on the headlines, would you have thought that to be the case? What did we see lead last week? Let me actually drop my latest Tale of the Tape article here in the chat real quick. I always like to share my articles here. Okay. We actually saw some improvement in the internals, and we had real estate as the best performing sector last week. Tech did well. Semiconductors were up over 5% last week. Semiconductors, I want you to understand that, were up over 5% last week. That is not what you would see if this market was about to roll over. You would be seeing consumer staples do the best. Utilities have had a little bit of a run, and they are the leader across the 30-day time interval. But it's that 1 week interval that I like to monitor to help gauge, where the money is flowing near term. Is it seeking safety? Is it seeking risk? And over the last 3 weeks or so, we've seen healthcare, we've seen utilities as the leader. Real estate isn't exactly, like, hey guys, back up the truck and go long, but it's also not like, hey, you need to be heading for the hills. Like, I'm really excited for this week because if we see technology continue doing what it's doing and we get one of those growth-oriented sectors emerge as the 1 week leader after this Friday, I mean, buckle up, guys, because we're going into the most bullish time of the year and we're going to be having a lot of fun. We're going to be having a lot of fun. All while staying disciplined, of course. All while staying disciplined. I'm going to talk about the path forward for crypto because sentiment there has definitely shifted. There's not euphoria at all. Ethereum has been dropping for 2 months. Ethereum has been dropping for 2 months. It's up today, but Ethereum hasn't hit a new all-time high since late August. We're in late October, guys. I don't know where this year has gone, but we're almost 1 month through the fourth quarter, and again, I'm getting ready to have a lot of fun in this holiday season, guys. I mean, we're going into the holidays. Even my son's like asking for like some Christmas songs. And my rule in my house is, hey, November 1st comes around, you can put on holiday music, but this is Halloween time. They're very excited for Halloween. I think I told you guys my son's gonna be Peter Pan and my daughter is gonna be Tinkerbell. So yeah, we're looking forward to finishing this year strong, guys. We definitely don't count the chickens before they hatch. I want to show you some data on how the VIX getting crushed the way it has tends to translate into positive equity performance across various time frames. And then, of course, it is Monday, so we will be screening the mid-cap sector to see what's going on, if there's any opportunities in that space over my weekend due diligence. The weekend's a very important time for what I do, for what we share in here, guys. I get a lot of good analysis done over the weekend, and it's nice because usually the crypto markets quiet down some. Stock markets are closed, and we get kind of like a sense of peace, right? There's not as much like headline noise and like people freaking out about the markets doing whatever they're doing. It's a great time to analyze. I encourage you to do the same. I have a routine on a daily basis after the market closes, on a weekly basis over the weekend, and on a monthly basis, after we get our monthly candlesticks, monthly closes as well. And so again, this goes back to discipline. Can you actually review the charts every night after the market closes? Can you actually spend 30 minutes, 45 minutes over the weekend surfing the weekly closes? I can tell you that your results as a trader will improve when you do that, because you're going to become more in sync with what the market is actually doing versus what people are saying about the market. I don't care what people say. I care about what the market's actually doing. Big difference. So appreciate you guys tuning in. Let me go ahead and jump over to Think or Swim here. Check who's all joining in the chat. Let's see. Who do we have here? Corey, we hit new all-time highs in Apple. Oh, we love to see that. Corey, my fellow bull, helps me deflect some of the heat I take for being a bull, but that's okay. Yeah, what a performance that guy from the LA Dodgers had. I'm not a big baseball fan. Admittedly, I'm more of a hockey growing up here in Michigan. The Tigers are pretty good. I grew up playing soccer, basketball. I was really into it as a kid, not so much anymore. But and then I like my I don't like watch every UFC thing, but I do enjoy martial arts, boxing, that kind of stuff. But yeah, no, I do like hockey. I hope the Wings actually are good this year. They started off on the right foot. I don't know if Brent's in chat. He usually provide some commentary on that. But let's see. Who do we have? We have SHP, 2 Carter, Greeny. Blake wanted to talk to me. Blake, if you want to talk to me, you can come back on. I just, figured you wanted your space to say what you wanted to say too. Ken, Nora, Roger Bro, Joyce. Yeah, Peter, I'm with you. The market did need to breathe. And we had to shake out like a lot of the hedging that we saw throughout this rise. And again, I'd love if Don had me on with him one of these days soon. I don't know if he's listening right now, but if he is, yeah, Don, I'd like to be on with you sometime here soon to kind of just talk if we do make new all-time highs here this week or next, what last week's volatility was so unusual. And what's crazy is depending on the type of trader you are, depending on your time frame, there were a lot of short-term opportunities, and Don really capitalized on them too. But I'm curious, what do we think that actually was? Was it kind of all the hedging, the pent-up hedging kind of manifesting and liquidating itself from the system? It was really unusual what we went through. So I'm curious, what the thoughts are in the aftermath of that. MLJ is a Trinity Trade person doing the happy dance. Yes, I'm glad to hear that. Tim, how you doing? Let's see. Yes, MDM Con, it is really important that again, you can always talk about this. You can be bullish on one time frame and bearish on another. That's the big difference. And so I've talked about how a lot of disagreements amongst traders happen because of not the best communication, right? Like, oh, you're bearish. Okay, what across what time frame? What time frame are you trading across? Right? Different traders are going to have different time frames and different ways to approach the market. And that's the beauty of TheoTrade. You have someone that's trading across a different time frame, depending on the instructor. So, find what works for you. Yeah, Rosario, strong emphasis in the word cement. Yes. I do have some concrete stuff in my garage, but I don't work in the cement. I do go to the we call it the yard, the company yard. I go there once a week and kind of touch up the yard, the office mainly. My aunt still works there. Um, but yeah, there's been someone on the payroll there, in that company for like since the 50s. So we're talking like 75 years, 70 years. Les, MDM Con, how's it going? I have a different GPU, Shane. I don't know. You guys still sometimes you say I'm AI. I am real. Many of you we met in Arizona last year. I think we're going to have a conference next year. I hope so. Florida Woody, MLJ. I'm looking buffed. Well, I hope it's not my face. I didn't have too many snacks this weekend. My wife made some really good chocolate chip cookies though, and then she made a chocolate cake for my son's birthday. So yeah, I did have some sweets this weekend. I'm not a big sweet guy. I prefer like the salty snacks like chips. But anyways. Mari, Nagril, Randy, Allen, Rio, Steve V, Kevin Fox, how's it going? Gaston. Oh, you're still in SMR, Peter? Glad to hear it. Frankie, Bonlun ID, Calvin, Rosario, 500% tariff tweet. Did that just are you talking about that happening right now? Did we get a tweet, or are we still holding up all right? Oh, we're still holding up all right. You never know, right? But at the end of the day, I'm not one that trades, hinging on the headline. So okay, let's get to the charts. I have a lot of really cool images and graphics to share with you all as well. So let's take a look at currencies. As we always begin with, this is part of my daily routine in the market. I always start off by looking at currencies. It's the biggest market in the world. It's the most important market in the world, believe it or not. And all this trade talk, right? It was back in the headlines again last week. I've been saying like it's playing out in the currency market the most. Okay. And this administration, they have been very transparent. If you've been listening, they want a weaker dollar and they want lower interest rates. Well, it's easier to have a weaker dollar when rates are down, because what's the incentive of owning dollars? If rates are going down. Well, I guess if you already bought the bonds, you're making money. But then if you have to convert it back to your currency, you're actually losing value. So again, you always have to think of in markets, whether it's stocks or bonds, commodities in terms of currency as well. Like some of you may have seen the price of gold denominated in yen. I mean, you want to talk about a bubble looking chart. I can't pull it up here on Thinkorswim. I can on TradingView. But I would encourage you to look that chart up, guys. Look up the chart of the price of gold in yen. And people talk about bubbles. That's a bubble looking chart. Okay. So the yen has been, taking some heat. I still, the dollar here, we're holding in the 150 to 152 range. This could be big, guys. I still don't know where this is going to settle, but I do watch it very carefully. The euro is selling off today a little bit. The dollar is up, but you do have this continuation pattern. But remember, we have a rate cut coming in about 9 days, and so that could easily be a catalyst to send the dollar lower again. If the Fed's going to say, "Hey, we're going to keep lowering rates," basically saying, hey, like wink, wink, nod, nod, like we're okay with the weaker dollar. Remember, that actually helps emerging markets, international markets as well, because a lot of companies, a lot of governments, believe it or not, issue debt denominated in dollars, but they don't receive their revenue or receive their taxes in dollars. They receive it in their own country's currency. Okay, so picture this. You have a European multinational company. They do business all over the world. They will issue a bond in dollars, not in euros, but they're still doing business in euros. This is the essence of being a multinational corporation. Okay? This is what they do. And so they have this loan outstanding. Well, if they're doing business in euros, they're receiving euros for the sale of their goods and services. If the dollar goes down, you realize that they are able to pay off their loans and service their loans with less euros, right? They're able to keep more of those euros. It actually boosts their profits, right? Because if the dollar goes down, the euro goes up, they only have to pay their loan back in dollars. If the dollar goes down 10%, that means the euro goes up 10%. They're saving 10% on their debt repayment. Isn't that cool? Isn't that amazing how they do that? So, yeah, pretty crazy to think about how that works. But yeah, that's a really important thing to understand in international finance. Yen against the euro. Again, the yen still looks kind of weak. We'll see what plays out there. Take a look at bonds here today. Nice rebound. We are bond bulls. It's not really the warmest and fuzziest position to be in terms of, being in company, but that's okay. But you take a look at the 2-year note. I'm looking for that to rip to the upside here in the coming days and weeks due to the Fed's next rate cut. But let's see, did I have this chart? I thought I did. Maybe I didn't. Oh, I'll share it tomorrow. But I was looking at basically like credit spreads. Basically the difference in interest rates between certain types of bonds. You can always compare them. You compare the interest rate to treasuries, to bonds issued by corporations, and the smaller the difference between the two, the more liquidity in the market. And with how dangerous the government's financial situation could be, I shouldn't say could be, how dangerous it is. It's making me wonder, could we actually see a situation in the coming years where corporate bonds, where the market's natural response to the government's financial irresponsibility, could we actually see corporate bond yields, private sector bond yields, private sector interest rates drop below those of treasuries? Usually, you have treasuries as what's considered the risk-free rate. They have a lower interest rates. Basically, that's why you have like Switzerland with interest rates so low. The more that a borrower expects, I should say a lender expects a borrower to be able to pay their loans, the lower the interest rate they offer, right? I mean, I wouldn't be surprised if we saw some companies have lower interest rates than the government in the coming years or so. That would be a real inversion, because for the longest time, let's say you have a 30-year treasury bond offering an interest rate of 4%, and then you have Apple, let's say they do a 30-year bond, their interest rate would be like 5%, right? So you take a little bit more risk lending money to Apple than the government. Well, who's more likely to pay back? Well, you'd say, oh, the government can print whatever they want. Well, Apple's got a lot of cash still. And it depends on the size of the loan that they, are issuing, right? Or the amount they're looking to borrow. But yeah, it's really fascinating to think about how the debt markets could evolve, especially going into inflation, right? Apple can't print money. Apple can't print money. The government can. But okay, if they print money to pay their loans back, well, do you really want to lend them that money? Wouldn't you rather lend it to Apple? It's going to be interesting to see how that plays out. But again, just food for thought. Take a look at crude oil. We've been crude oil bears for a while. That's fine. I don't really think there's much big opportunity. When it comes to energy, I think there's I'm watching even solar power. Maybe it's turned a corner here. Oops, I wanted the weekly chart. You get solar, the 10 ETF above like 50, 55. I think it starts to look really interesting. what's NXT, I think, next tracker. This has kind of been the solar stock that has been bucking the trend. It's been very strong, but a lot of the other ones still have a lot of issues. So, I know natural gas was having a day earlier today. I don't trade natural gas. It's the Widowmaker. Not really my interest there. It's pretty much just like utility companies and producers in that market. So I think there's a lot of other better things to be involved with in this environment, especially. So yeah, XOP, XLE were up on the day, but nothing really that is exciting going on there. Take a look at stocks. S&P 500 up almost a full percent on the day. Let's see here. Are we close to? We're not far. We could be in. I don't think will happen today. Maybe we will get a record closing high today. But you know me, guys. I say this every day. I'm more excited about the Nasdaq outperforming to the upside. You have the Nasdaq up around 1.3% on the day. There's a pretty good chance that you hit a new all-time high today. And there's a pretty good chance that you close at a new all-time high. I would say probably a better chance that you close at a new all-time high versus hitting a new all-time high. But this is not something that you would see if this market was about to roll over. You would be seeing the Dow lead more regularly. Why? Because the Dow is a bit safer. It's 30 blue chip stocks. Nasdaq's got a lot of high flying growth, high beta names, text names. Those ones are more susceptible to changes in the wind, if you will, than some of those legacy Dow 30 names. But yeah, this is a very bullish chart, guys. I'm looking at this now. It looks like we have a pretty strong pathway for this to get closer to like 27,500, 28,000 in the Nasdaq before year end. So that could be another 10% rally, believe it or not. That's the way I'm reading this chart right now. And it's pretty exciting if you ask me, especially after that big volatility flush we had last week. The Dow's looking strong as well. You take a look at the VIX, just getting absolutely hammered. Let me see here. Did we get out of that backwardation yet? We did. We are out of backwardation. So, and we're about to roll over to the November contract there, and you take a look at the December contract, we're out of backwardation there too. So really amazing just to see how that has played out. And again, I wonder like what that could have been. So I'd be curious to investigate that just for my own, the own sake of my own learning, my own mind. Because I always say, like, I always consider myself forever a student of the market. There are definitely more important things to know in this business than others, and we try to focus on that stuff the most here, to really hammer home that value per time, right? Because we don't. I feel like there's not enough talk about time in this business. Yeah, like you have your time value and options premiums, obviously futures contracts roll, but actually like studying, intellectually diving into the statistics behind time itself. I think that we would all be better traders if we did that. So Russell's looking good, outperforming the S&P. Semiconductor index hit a new all-time high. This is music to my ears. I love to see this. You have SMH at new all-time highs as well. We have that position in AMD that's hitting a new high, looking very good there. This is actually resolving a bit faster than I would have expected. Micron up to new highs. We're still long this name. And you just look across the tech and the semiconductor landscape. Broadcom's up kind of quietly. Nvidia, we've been bullish this. I think it's going to 230. Looks pretty strong from my point of view. So, we're seeing the leadership from the right places. And that's what matters the most, is when you see leadership start to weaken in this sector of the market, that's your first sign that it's time to play defense. Okay. Now, I like to show you these sentiment surveys because I always like to remind you that sentiment follows price, not the other way around. So we have a survey here. I think it was an AAII. I actually don't have the let me see. Yeah, I don't have the source of this, but it's a sentiment survey that I picked up on. It's okay. And it asked the participants, how would you describe the current valuation of stocks? The answers were stocks in general overvalued, valuations are mixed with some stocks expensive and others cheap. Stocks in general are fairly valued, and stocks in general are undervalued and not sure on opinion. Okay, so the overwhelming majority thinks that stocks are overvalued. Okay. I shouldn't say the overwhelming majority, but the majority of the responses is 55%. So over half of the participants that were surveyed think that the market is overvalued. What if I am kind of in the camp always that stocks are always fairly valued? I don't care if a stock, drops 10% the next day. I think that's the fair value because again, based on what time frame, like today, we're talking about today. So yeah, again, a lot of people think this market's expensive. A lot of people think it's going to drop. I mean, is it the most forecasted drop in history? Is it the most, like, oh guys, it's going to be sunny this weekend. All meteorologists believe it's going to be sunny this weekend. And in that situation, usually it is, right? But we're not really dealing with that necessarily here, right? We're dealing with people's emotions, people's money. It's a little bit different. So take a look at how the VIX. So the S&P 500 after the VIX jumps above 28, while the S&P is within 3% of an all-time high. And so we had that, and then 1 week later, you're up 75% of the time for an average return of around 0.8%. 2 weeks later, you're up 2/3 of the time, average return of 1%. 1 month later, over half the time, 1.75%. But then 2 months later, you're pretty much up and beyond over 5%. Over 5%. So I want you to just take a step back. Where are we in time right now? We are coming into seasonally the most bullish time of year. November and December tend to be good for stocks. So 2 months from now would be December 20th. And if we're at the index level 5% higher, I mean, the highest we ever had was 8.9% in 2020. Okay. So again, I don't think there's really reason to be so concerned. And by the way, guys, in case you were wondering, buy the dip, the average return in the S&P in the session following a down day. This is one of the best days for buying the dip. Best years, I should say, for buying the dip in recent years. Better than 2020. Why? Because the trend is up. The trend is up. When you are in an uptrend and you want to trade with the trend, your strategy is to buy breakouts, not just buy dips, but you buy breakouts too. You buy in a break to new highs and you buy pullbacks. When you are in a downtrend, you sell when a market or that stock is making new lows, and then you can also sell corrective rallies. You don't go short in an uptrend, guys. That is a recipe for disaster. A recipe for disaster. And, I'm seeing people say, oh, AI's done. So here we're looking at CapEx, capital expenditures as a share of cash flows from operations. And you go back to the dot-com bubble and you see TMT here, which was what a lot of the internet companies were spending as a percentage of their cash flow. They were spending way more during the dot-com bubble because they wanted to get in on the new thing, right? So on this one, I think we can go higher. I don't think the AI bubble is over. I don't think the quantum bubble is over. I don't think the nuclear stocks bubble is over. I don't think the crypto bubble is over. It's going to get bigger. It's going to get crazier. It's going to become more nonsensical. It's going to get more ridiculous. You're going to see people go from rags to riches. You're going to see people make fortunes, and it can be you as well. But the big test will be whether you can keep it. It's not what you make in this business, it's what you keep. It's what you keep. And we went through something like this in 2020 to 2021. How many people do you know made a boatload of money buying options on, Tesla or just, YOLOing into Bitcoin in 2020, 2021, and then they just blew it all in 2022. I've seen this happen. Like, I haven't traded every single bubble in history, obviously, because we've seen bubbles going back, we've been able to look at bubbles 400 years ago. Okay. So bubbles are the best places to make your fortune. They are. So we should all be very excited. We should all be very grateful. We should all be very thankful that we are in a position, that we are alive right now in this moment, that we can better ourselves, that we can improve our station. Okay. I'm very grateful to be able to trade these markets. I think it's a better market to trade now than it was in 2015. I do. And we were in QE back then too. So anyways, I think that there's a lot to be excited about going into year end. So let me go ahead. Yeah, that 1 year later stat on the VIX, Ken. Yeah, 1 year later, you're up 100%, almost 21%. I mean, again, guys, like if we at the index level, if the S&P 500 is up 20% a year from now, you're going to have individual stocks up over 100% in the US. And I made this argument when it comes to looking at China as well, because I'm still bullish on China. In fact, I did a bit of a deeper dive on the Chinese market over this weekend, and I'm even more bullish on it now. I'm even more bullish on it now than I was, before. I think it looks really strong. So let's take a look at some of the other big tech names real quick. Apple, new all-time high, big beautiful breakout there. That's exactly what you want to see. I was looking for the rotation into Apple. It finally hit a new all-time high. We were talking about this last week. Hey, Apple hasn't hit a new all-time high in 2025 yet. Well, we did it. We did it. Meta's trying to come up off that lows. Tesla, big week for Tesla. We have earnings. We are long. This thing looks ready to rip. Even if we get a pullback, I think you want to buy the dip. Everything's about car sales. Guys, this is not just a car company. This is not just a car company. I have raised my target on Tesla. It is no longer 500. It is 670. 500 is not good enough for me. We're almost there now, and this thing looks ready to rip. It looks ready to rip. Okay, Amazon, keeping my eyes on that too. This one looks like it wants to reverse here as well. And then Google new all-time highs. Again, that's bullish. This one seems to be a bit more extended. I mean, you could still see this thing go to like 280, 285. So it looks good. It looks good. Mag 7 is going to become a bigger part of the market. Just be ready for that, because people say, "Oh, it's not fair." It's not fair, guys. The Magnificent Seven stocks should not be a certain size of the stock market. That's not right. What about all the other small companies that don't provide nearly as much value to the economy compared to the Mag 7 names? That's not fair. That's not fair, which is really rich coming from so-called like, oh, I'm about the free market. Yeah, these are monopoly companies, but like, don't you believe in profitability? Don't you believe in efficiency? Like, that's what I'm saying, guys. Like, don't get caught up in all that stuff. It's a waste of your time and energy. If you want to be a trader, if you want to be, an economist, philosopher, by all means. By all means. But we're talking about trading here. It's a totally different thing. Totally different. Do you want to be right, or do you want to make money? That's why I say that. Some people don't like when I say that. Well, you know what? It's tough love, and it's the truth. It's the truth. I don't care about being right. I care about making money, and I think you do too. That's why you're here, right? So I always like to say, like, why are we here? Know your why. Know your why. What is your why? Do you want to protect your money, or do you want to grow your money? Two totally different mindsets, two totally different strategies. So yeah, I like what's going on. How's Netflix doing? Netflix is a nice bid here today too. Nice bid. Let's see. Did I look at yeah, I think I looked at yeah, I looked at all the Mag 7 names. Let's go ahead and jump over to China, see what's going on. China looks good. Not up as much as the US, which is pretty remarkable to see. I'm still pretty bullish on it. KWeb up nice. That's not up nicely. CQQQ. Is this up more than QQQ today? It is not. Wow, look at that. US tech not missing around. QQQ looks like it's going to close at a new all-time high today. I mean, it's within $2 of an all-time high right now. So that looks good. Let's see. Okay, crypto. I see some questions in crypto. Do I think crypto is done with the pullback? Yes, I do. I do. I do. I think we bottomed. We had a massive liquidation. And I think again, this is going to get a lot of fun. I don't think the most value, the most bang for your buck is in Bitcoin. However, um, Ethereum's up. Is it up more than Bitcoin right now? No, it's not. Ethereum's kind of slowing down some. A little bit of sell off there in Ethereum. Yeah, Bitcoin's maybe we're getting a rotation into Bitcoin. So I also am watching Solana. I like Solana as well. So that looks good. But you look at some of these names like Hut, I'm actually looking for Hut to kind of build another base and move back higher. So that looks strong. And then I'm even liking what's going on here in MicroStrategy. So again, there could be a lot of fun things happening in crypto. I will keep you posted on that front. Gold and silver. Gold trying to close at a new all-time high again. I mean, just absolutely incredible. Just absolutely incredible what we're seeing there. I'm still looking for a pullback. This doesn't really look like the strongest price action today in gold and silver. Metals got absolutely crushed. Miners, I should say, got crushed on Friday. A little bit of a relief rally. I'd love to see this go sideways. I'd love to see it correct either through time instead of price. But I'm kind of just treading a little bit carefully on that front. I do want to show you real quick on the crypto front how I'm actually saying this ironically. I don't actually mean this. This time is different. So when you have 2024, so I think this is looking at the halving. Yeah, days after halving, that's what it was. So days after halving, we've not seen the performance in Bitcoin really track previous ones. This is why I'm not big on the halving, right? People, especially the crypto cultists, right? I'm not a crypto cultist. I just think that crypto's had a lot of great risk reward. If Bitcoin went to zero, I would care less. Honestly, I would care less. All these like crypto treasury stocks, it's not going to end well. It's not going to end well. I don't think so. But that doesn't stop me from trading them because I have a way to approach the market where I know what I'm going to do and when I would do it if a certain condition presented itself. I know how to act. I know how to act if a certain scenario played out. And so we haven't seen anywhere near that same type of performance. I don't think we're going to get it because people are like, oh, Bitcoin's going to go to $1 million by the end of the year. I mean, come on. Come on. That is ridiculous. That is absolutely ridiculous. I think Bitcoin could hit 150 by the end of the year. And anything more is just, I guess, just like gravy on top. But, people say, oh, if we just did the halving cycle. I mean, guys, that's not how markets work. Supply and demand are very real. But just because something loses half its supply doesn't mean that demand is not changing either. Like that's what people don't understand. You can't just look at supply on its own. You have to look at demand too. Right? It's why it's like if you go into economics class, they put like a big X on a chart because the price is where supply and demand intersect. It's not just like, oh, there's less supply. Well, people say, oh, well, when there's a shortage in grain, prices go up. Yeah, because the demand is people have appetites and humans have needs to eat. We have a demand to eat, and that doesn't necessarily change that much. So demand is relatively constant, unless you have population changes, right? So again, like I just see this stuff and I'm a bull on crypto, but it's not like who I am. I'm not a one-trick pony. I'm not just about crypto, you know? Just makes me laugh. But again, like I'm not in the business of changing people's minds. That's not what I'm here to do. I'm not here to be like, "Oh, look, I proved you wrong. Look how smart I am." No. That's not who I am. I'm a trader. I'm a trader. I'm a speculator. That's what I do. And, there's a lot of people that I think actually care more about saying like they were right than actually making money in the market. Okay, fine. I mean, that they are part of what makes a market, right? I don't need to convince bears they're wrong. I don't need to convince bulls that they're not bullish enough. We all have different goals and objectives, right? You are not me. I don't think you want to be me either. And as much as I love you, I don't want to be you either. Okay, so that's what's on my mind, I guess, right now. Okay, I am a trader with a D. I'm not a traitor with a T. No, I know that's always funny. Like when I've done like video stuff, like make sure you like really emphasize like the D when you're speaking instead of like the T. I'm like, yeah, I know. Like sometimes that happens. Um, so let me see here. Okay, let's go ahead and run some mid cap screens now and see what's going on in that space. It should be a really exciting time for mid caps as well. Okay, let me see here. Get this all ready. Okay, what do we have here? A lot of these we've been looking at lately. How's APLD doing? This looking pretty strong. Again, I don't think the crypto story is over, guys. That actually looks pretty good. It's not ready to buy right this moment, but definitely worth keeping an eye on. How are the quantum names doing today? They're kind of flat. Again, this QTUM chart doesn't look like one that's ready to roll over yet. So that's going to upset a lot of people because everyone wants to be Michael Berry from The Big Short. That's why I wrote that article the other day. Like, do you suffer from big short syndrome? Is The Big Short in the room with us here right now? Can you share with me where The Big Short impacted you the most? Okay, I'm not trying to be, not trying to like, make it unserious. Like I get that stuff can be serious, but like just this obsession with like, oh, I nailed the exact high, the exact bubble. Like, all right, dude, like you can have that title if you want it so bad. No, I just don't get it. But anyways, LEU, we've watched this stock just become the real deal. I mean, I actually cannot believe what happened in this stock. It's a stock that we covered. Like you can see my drawings here. Like when I first started TheoTrade, it was trading around like $50. And I always kind of stayed away from it because it was low volume. And then at the end of last year, just went absolutely nuts. And then since the April low, just went into blast off mode. SoftBank. Wow. Japanese name looking really good. How's the Nikkei doing today? Actually, I want to see. Nikkei new all-time high. Wow. Amazing. Cogent Biosciences. Oops. COGT. This is a good looking stock. It is on one of my watch lists, believe it or not. I should say it is on my watch list. I only have one watch list. But this thing gets back above 17. It's looking really strong. So yeah, you can see they hit the high there today. So definitely worth keeping an alert on this. 1657 is going to be where we're going to be watching the most. Okay. BitDeer. Let me tell you a funny story, guys, on BitDeer. And it is funny. Because I try to find humor on things that I can't control. So this was a stock that I took in the Trinity trade. I went long right above like 1852 and I had a target of 27. So last week we hit that target and I put in my limit order and it filled for myself. So, I trade the Trinity trade picks always, but I also had it in the $1 million challenge portfolio. And I could have swore I hit the enter button at 27 for the limit order of $1 million challenge, but apparently I did not. So it didn't fill there. And then after the volatility that we had last week, I wanted to, kind of reduce my margin exposure a bit going into the weekend. I'm still on margin. I've traded on margin during this whole volatility, believe it or not, in the $1 Million Challenge. I've obviously it's fluctuated, but um, stayed on margin during that time. And again, it just when you hear the stories of people blowing up because they go 50x long Bitcoin at the highs, I'm like, yeah, that's not trading, but okay. Again, part of what makes a market. Okay. But I never filled on an order at 27 because apparently I'd never hit enter on that order. So I felt like a dummy. Like I make mistakes too. But I was able to book it for myself and I missed the trade. The trade's still up. I didn't sell the whole position. So now it's up like 9% today. I guess I should have left that order, but I did reduce it by a third in the $1 Million Challenge going into the weekend. So it sucks. Like mistakes happen, right? But what is the lesson learned? I guess just double check that my orders go through. I guess I never hit submit. So I missed what would have been a bigger gain on that one, but it's okay because it's still looking good, and I still think that it's going to continue substantially higher. In fact, I think the stock's going to hit 46 in time. CleanSpark, we've been watching this one. This is one that I've traded over the years, believe it or not, and it's just one that I never really made money on. It's just one of those situations where, honestly, like you look at even some of the nuclear names like SMR, NNE, Aklo. When I say, do you want to be right or do you want to make money? Like this is one of those instances where as bullish as I've been on nuclear this year, I didn't see the benefits of being right as much as I should have. Honestly. I mean, you can look at all my trades, like they're all documented. And I'd never really had like that big of winners in the nuclear names compared to how they moved. Like, yeah, I had some 25, 30% wins like here and there, but I mean, I've been pounding the table on this stuff all year, guys. And I don't really have much to show for it. Quantum, I do. Crypto, I do. Chips, I do. Tech, I do. That's fine. But again, like that's what actually bothers me the most is the fact that I should have made more money on this. Same to be said with precious metals. Like I've done very well with precious metals this year, but I should have done better. I know I should have done better on those. So again, that's what I look to. Those that's like my goal, my objectives. AMSC, we still have this name. We tightened up our stop sum even more. This stock has probably been the best name we went on the record for, saying to get long. I think we got along around like 14 or so. No, what was it? 22, 23 bucks. So that's sitting pretty still. Scaled out along the way. Forward Industries. It's funny. It has Ford as the ticker symbol. Yeah, this doesn't really look that good. How is Ford doing? Ford actually looks like it's trying to make something happen. On the daily, the weekly doesn't look as good. The monthly, yeah, maybe you do go back to the highs in Ford. And again, I think it has a lot to do with interest rates. These are consumer cyclicals. They do better when interest rates are lower. So, yeah. Let's see. I'm just checking the chat here because I was kind of just scrolling around. MDM Khan raises a really good point. What many don't notice about the Big Short movie is the amount of time in drawdown. Burry took being wrong to be right in the Big Short. He missed on all the upside. And it's nothing against Michael Burry. I think he's actually a pretty cool guy. But it's just the obsession of this movie. I see it like mentally warping so many traders. That's why I go after it. Nothing against Michael Burry whatsoever. It's just that movie, you know? So, let's see a couple, you guys want me to look at Vale and Nucor? Or that's not Nucor, that's that bank, right, Frankie? You still have that? Vale is looking better. The daily looks really good. I think the weekly is telling a different story. You get above 12 bucks, that looks a little bit better. That's that new holdings. Yeah. Is this the Brazilian bank, right, Frankie? This actually looks really strong. This looks very good. Let's see, 950, 16. This thing looks like it wants to go to like 24 bucks. So this is not going to trigger today. but I can set up a trade idea on this. 1630. Okay. And let's see, 1467. It's actually a really good setup. Nice spot, Frankie. 1473 will be the stop. Okay, so here's a trade idea that I will share for today. It's not going to trigger. It's not going to trigger. Oh, I went to the wrong spreadsheet. One sec here. I gotta put this in my tracker here. Okay, so here's the trade. Again, it's not going to trigger today, so don't be like, unless it just explodes to the upside, but I don't think it's going to. So buy NU on a close above 1630 with a stop loss on a close below 1473. Target 24 to reduce. Okay. So we'll see if and when that one triggers. Okay. Good looks there. Gaston wants to look at Rani, R-A-N-I. Wow. Stock's going for 260. I can't do anything when it's up 60%. Still trying to come out of a downtrend though, so not really my style. It looks like it has done so though. But INTR, Inter & Co. What do they do? Nice uptrend here. Doesn't look bad. Yeah. Want to keep an eye on. I'll set an alert here to see what happens. 947. I'm not even sure what they are. But I'm pretty much out of time, guys. Blake Young's in the house. He's going to be taking you through the next segment. So make sure to stick around. We covered a lot of ground today. We talked about the dangers of motivation versus the promise of discipline. Motivation will get you through a moment. Discipline will get you through life. It's a big, big difference. The trend never changed, guys. The trend is up. You're seeing the leadership from the right places. I'm encouraged by what I'm seeing by the market's internals. Crypto, I think we're going into a very exciting period for the year now. And we looked at the data of how the S&P 500 responds after a VIX crush along the lines of what we saw. We looked at a few mid-cap names, came away with a nice trade idea on NU. So that's going to do it for today's session. I do have a newsletter going out to Trinity Trade members later this afternoon, so stay tuned for that. Aside from everything else, that's all for me for today. I appreciate you guys tuning in. Blake Young's going to take you through the next segment. Blake, how's it going today? You're muted. I can't hear you, Blake, because your microphone's off.
I kept pushed on the unmute 3 times. Dang it. And I click on it and it said, you're muted. Click on it, you're muted. So I said, it's amazing. What a great day today is. So I know that anytime I take over from you, I like to take a few seconds. Look at this. My greed and fear indicator. You talk about the VIX being crushed. So yeah. This is fear.
Wait, are you sharing your screen?
I click on share. Is it?
Oh, let me stop sharing because I want to see what you're sharing. Let me see. There we go. Okay.
Everybody else but you saw it. So
yeah.
So this is utmost greed. This is utmost fear. So when greed, fear, look at that. And it hit right to the fair price. It did cover 2 ranges.
Wow.
Right to the fair price and bounced. So there's your VIX crush right to fair price again. So this to me is just perfect as far as telling you, look, we unwound that. We were overly greedy here. We unwound it. We went into fear. We unwound that and found balance at the same balance that we've had over and over and over and over again. This is the balance point. So you want to go bullish, go bullish. You want to go bearish, go bearish. This is the point where you can just follow the chart. Don't worry about your feelings at this point. This is balanced. So
it's pretty cool. I like that.
Yeah, it worked out really well.
Yes. Cool, Blake. Well, I'm going to hop out of here. The floor is all yours.
Thank you. Appreciate it. All right. Good morning, good afternoon, depending on where you're at. Good evening for our friends over there in Europe and other parts of the world. We have friends here from Singapore and Indonesia and Iraq. We've got you from all over the world. Good morning. Alrighty, that's the first I've heard that. We still good to go? We still recording? I heard it say recording stopped in my ear. Yeah, I can show the 3-stream monkey bar. Let's go through a couple things today. So this